Should I buy a home during record high inflation and these rising interest rates? Is a home even a good real estate investment? Will rates or home prices ever seem to come down? These are all valid questions that our current buyer clients are asking themselves and us when we meet with them for our discovery call. They are all valid concerns where they see themselves financially, personally, with their career. Everybody's scenario and situation is a little bit different. So to avoid the noise, we really have to dive deep and see what goals the client has and if real estate can help them meet their goals. One of the ways that we do this is we tell our clients the future is always going to be bigger than the present. So it's always a good time to invest in yourself and in the information and the data of the marketplace to see if now is a good time to invest in real estate. So in this video, we're gonna review a real life case study of a first-time home buyer that just bought right in the heart of Denver. She had all the same questions, concerns, and the way that Rachel and I started our meeting with my onboarding team is real simple. We asked her this simple question: how would your life change if you could stop wasting money on rent, begin to build equity, and have a place to call home to give yourself stability and knowing your landlord won't terminate your month-to-month lease? Your own financial situation might be a little bit different than Rachel's. You might not be a first-time home buyer or whatever, but how would your life change if you could buy this property, let's say within the next month, 3 months, 6 months, or a year, right? How would your life generally change, not just financially, but overall in the next 1, 5, 10, or even 15 years if you were able to secure a place, quality place to live? So what the heck are we going to cover in this video? We're going to pull the syllabus up right now. Here's the topics of conversation. How our Competition Crusher loan approval program helped Rachel and her realtor get under contract against 7 other buyers that were placing bids on the same condo. How our program protected Rachel against rising interest rates with our Lock and Shop Rate Protect program. We're going to review her answer to that very question: how would your life change if you were able to buy this property here that you want? And as a first-time home buyer, she was considering either putting 3% down or 5% down. And we'll show you exactly what she picked and why. During the process here of showing you the why is I'll show you our analytical tool that we use after our discovery call and after our clients have done their application and document gathering for our review. We use what we call a total cost analysis that shows the variances between different loan types, different down payments, maybe different loan terms, whatever you might be considering. As in this example, 3 or 5% down on a 30-year loan. The nice thing is that the data basically doesn't lie. The consumer just tells us what they want to do, right? So we analyze this, as a team, as a group, right, to help figure out what loan product is the absolute best based on the client's financial situation, their goals, and all that type of thing. Okay, so first and foremost, if you recall from the intro, we beat out 7 other offers on a property. So there's generally 3 different types of loan qualifications that a bank might give you as a home buyer, potential home buyer, before you go in the field to submit offers with a realtor. You're gonna see in this chart here, there's pre-qualification, which is a terminology, there's pre-approvals, and then what we use for all of our buyers is our Competition Crusher. Okay, so you can see there's significantly more work that goes involved as you go up the ladder or the hierarchy there of the preliminary work that a buyer does. So think about this for 1 second, right? We are in a very seller-friendly market, although it's not as nutty as it was maybe a year ago at this point in time. However, there's still not a whole lot of inventory compared to the amount of buyers out there. So let's call it still a seller-friendly market. If you were selling your property to 7 people placing bids, and then 2 of them had pre-quals, 2 of them had maybe a pre-qual and half of a pre-approval done, and then we come swooping in with our Competition Crusher showing that Rachel has done all of her homework, we validated her income, validated her credit report, submitted her file for a preliminary computer underwrite, and then also submitted her file to our human underwriter, which would ultimately approve her loan before she even went shopping for a home. What client would you rather, put your stock of faith in when you're listing your home? That's right, everybody wants that security, that like fuzzy feeling if they're gonna accept an offer that the transaction is gonna close and that the client has actually done their due diligence to make sure they can afford the property. So on top of the competition crusher, which is that full loan commitment, we can also do what we call our lock and shop or rate protect program. It's really, really simple. We can submit a interest rate lock at, let's say, today's given rate. So rates do go up and down day over day. They've been skyrocketing the first like 5 or 6 months of the year. They've come back a little bit, of which you'll see in Rachel's example here when we do our total cost analysis review of her file. We were able to lock her interest rate in early for 120 days. And by the time she got under contract, they were over half a point higher than they were when we actually did her pre-approval and her competition crusher before she went shopping. One of the other cool things about the Rate Protect Lock and Shop program that we have is, what if rates get better by the time you get under contract? Guess what? The program allows us to do what we call a float down to adjust your long-term interest rate lock to protect yourself from skyrocketing interest rates. And if they decrease, we just float down to whatever the market rate is that you qualify for at that point in time. That allows us to stay in compliance with your sales contract. So technically it's a win-win-win situation. And if you recall that magic question that we had, we're gonna dive into what Rachel actually responded during our preliminary meeting, our discovery call that we call it. So again, how would your life change if you could stop wasting money on rent, begin to build equity, and have a place to call home to give yourself stability and knowing your landlord won't terminate your month-to-month lease? Well, quite honestly, her preliminary answer was pretty simple. She wanted a place to call home, that she could decorate herself, she was in charge of her own space, and nobody could basically tell her what to do. But then she went on to explain this in further detail. Since she's living on a month-to-month lease, there was a little bit of unnecessary stress that she had day over day because of the fear that her landlord may sell the property because the property increased so much in value, so much since he bought the property. So really what she did feel like as well is she could have a little bit more stability when it comes to calling a place home. And she thinks that her workload is actually going to be much easier and little less time consuming because a lot of her mind was not having to think anymore about the basic need of housing. So for me, I feel like that is a fantastic reason to overcome the fear of the broad-based market, really internalize why you would be buying a house like Rachel did here, and just take the data as it is and move forward. If you can find a property that fits your budget, that meets your needs location-wise, meets your needs for the family, there is not a bad time, in my personal opinion, to at least analyze yourself to see if homeownership is in the cards for you. So now we're going to jump into the total cost analysis, where again the first question was, should she put down 3% or 5% down? So in this chart you can see preliminarily that the 5% down came with a slightly better interest rate of 5.5%. For the 3% down was slightly higher at 5.625. So the biggest thing that was the ultimate kicker on 3 or 5% down were the first two analytical tools that we were looking at. She really wanted to keep her budget right around that $2,500 mark. So the 3% down you can see was a little bit higher, sort of pushing that $2,600 mark. She didn't feel comfortable with that, even though it was, roughly about $90 spread, let's call it, give or take a couple of dollars. She really felt like, since she had the money in the savings account, why don't we just put that towards the equity stake in the property? So one of the other pieces of data that we analyzed too, which is in the first 5 years, what's the difference in interest that you would be paying if you put less down versus the 5% or the 3%? So you can see in the savings over 60 months, her interest savings between the two, the 3% down and the 5% down, is about $5,000, a little bit over $5,000 more in interest by putting less down. Okay, so when we did our competition crusher, so we got all of Rachel's documents gathered right away, we did our buyer presentation, we analyzed with my software that I use what the interest rate market was doing year to date and the trends. So we kind of looked at, does it make sense to do the lock and shop? In her personal opinion, of course, it made sense because, as mentioned previously, if rates go up, you're protected. If rates go down, you're protected. So really, it's a win-win, a no-lose, scenario there. So what we did, if you can see here, we locked at that 5.5% interest rate. And if we wouldn't have done that, by the time she was under contract, interest rates were at 6.125. And if you look at this first figure here, look at what happens to her payment. It goes from just above $2,500 to nearly $2,637. So that is a massive increase. That's $132 of increase by just not having the mortgage loan officer or the product availability like what I have to offer my clients to protect themselves against something that you can't control, which is the overall market, like what the heck is happening with interest rates. You as an individual consumer cannot do diddly squat about it. So our lock and shop program here saved us big dough. And as we look at the next two charts here, the next one that we're gonna look at is that 5-year time horizon. It was already over $10,000 difference if she didn't do the lock and shop versus where rates were when she initially got under contract. And then if you look at in 15 years, the total interest on the mortgage and the mortgage insurance cost, because she didn't put 20% down, she had mortgage insurance on that 15% that she wasn't putting that full 20% down. Those two factors alone, if she would have waited to lock her rate at the higher rate, her total interest in MI exposure would be $277,136. Because we were able to use that Rate Protect program, that lock and shop, her interest in MI exposure drops to $246,257. So we're talking about 31 grand just in loan cost because the market rate went up. So how would you feel if you were able to apply today, get pre-qualified, get your loan set up, lock your loan, and take two of the biggest stressors away, which is, can I really pay for this house? Can I really qualify? Will the bank approve me? And of course, what will my rate potentially be? So you might be asking yourself, Bob, how can I take advantage of this? Well, if you look in the link in the description, we have really two key takeaways for all of our clients. First and foremost, we have our mortgage calculator. That's a whole calculator suite that I built out for anybody that might be wanting to refi, but mainly for our purchase clients, right? It gives you an affordability calculation, see how much you can afford with the inputs that you put in, and then a home purchase payment calculator. So once we're actually in the field, once you're shopping for homes, you can crunch the numbers that you see based off of the listing sheet for that property and see if that home, based on what you want to put down, where interest rates are, if you've locked your loan already, what does that payment potentially look like before you start to place that offer and negotiate with the seller. So that's the first and biggest thing that most of our clients love to use. And with that, you have access to our application suite, our borrower portal, all of my home buyer ebooks and spreadsheets that I've built for net worth worksheets and budgeting and all that type of thing. So it's a free thing for you. Feel free to download it on your phone right now. Have at it. It's super great. People love it. Then if you're ready to rock and roll, you can request a pre-qual certificate. My team, my onboarding team, will start to engage with you. They'll ask you a couple questions just to make sure you didn't fat finger any answers. Mainly what's your true credit score? How much are you thinking of putting down? Where are you looking? When? And what's your household income? Then from there, you and I and the team, we do a quick discovery call, 15 to 30 minutes, kind of learn a little bit about you, make sure we have a nice personality fit, and if we do, we move to the next stage, which is that application and homebuyer presentation stage, basically where we're going to begin to basically mold together your home buying journey, your mortgage journey, to prepare you for the field so that you too can beat out other buyers, you can protect yourselves from higher interest rates, and ultimately let the Bob the Broker team guide you on your home buying journey, because no two buyers are the same, no two borrowers are the same. You have a very unique financial situation, you have unique goals that you're looking forward to achieve in the future, and we would love to be a part of that process with you.
All right. The time is now to snoop around the channel and get that brain growing. Watch one of these videos right now, here or here. And if you haven't already, don't forget to subscribe, hit that bell, and like this video so we can see each other on that regular basis. Check out our free loan qualification certificate so you can find out how much mortgage you can qualify for and scope out our free mortgage calculators. Stay sweet.